Global wealth grew for a second straight year in 2024 with a 4.6% increase. That's according to the UBS Global Wealth Report. The Americas accounted for the majority of the increase, while the EMEA region lagged behind with growth of less than 0.5%. Let's get some more analysis on this with Paul Donovan, Chief Economist, UBS Global Wealth Management. He's still with me. Now, Paul, of course, you're the Chief Economist, so this wealth data, what does it mean to you?
Well, when we're talking about global wealth, there is a myriad of complications. So one of the challenges is that countries are very bad at reporting on wealth. People don't like disclosing how much wealth they have, but also a lot of economic data is focused on growth, on flow, not on a stock concept of wealth. We don't go around counting how much money is stuffed under people's mattresses. So that presents a lot of challenges in this. With this sort of data, what we are seeing over the course of the last 25 years, so this century, we've seen steady rises in growth. Now, there's noise. There'll be years when things don't go. But there is a steady and consistent increase in global wealth. And it's not just the very, very rich that are growing. Across every wealth category that we look at, we have seen an increase in wealth. The number of people who are in the bottom wealth category, which is less than $10,000, has fallen significantly over the course of the last quarter century.
What does it mean, though, in terms of the society and political implications? And I'm sure you've been looking into that. As wealth is rising, the divide, I assume, is rising as well. What does it mean?
So the divide is not always rising. In some cases, in some countries, the divide will be narrowing. It depends a lot on what sort of assets are appreciating. And when we're talking about global wealth concept, it also does depend on the exchange rate, because exchange rate fluctuations will change the dollar value of your asset holdings. In terms of the politics, we're in a period of dramatic structural change. We are seeing rising levels of government debt and rising deficits. And a lot of people get very concerned about that. How are governments ever going to pay back debt? Well, governments never pay back debt, so that solves that problem. But then what we've got to think about is the other side of the equation. Because, yes, you've got high debt, in some cases record debt, you've also got record wealth. And so the question is going to be, for me, over the next 10, 20 years, how do governments mobilize that wealth in order to finance the deficits? Is it going to be taxation? Is it going to be through, quote, encouraging investors to buy government bonds? What are we going to see? But I think it would be unrealistic to suppose that governments are just going to ignore this enormous stockpile of wealth. It is something they're going to seek to use to help them finance their fiscal positions.
Let me ask you, though, I know you're the chief economist, but I know sometimes you double up as a bit of a strategist as well. So what are the wealthy? What are they doing with their money? Are they very much diversifying away from the US dollar, which is a trend that we've seen in the markets and across central banks as well? Are they all going into gold? Are they still buying into private equity, private assets? What are they doing?
So it depends on the individual. It depends on how conservative they are. We have some very conservative clients in certain areas of the world who are concerned about political risk of holding assets in the United States. I would say that is a very, very niche view. Overall, there is, I think, a tendency to look a little bit more diverse in terms of geographical allocation. There has been some shift in that. Gold is always popular with the wealthy, but this drive of a higher gold price has been mainly actually about central banks rather than about private investors piling in dramatically. There is absolutely interest in private equity. We've got to remember that a very large part of the wealthy in the world are entrepreneurs. So they're used to investing directly in businesses. This is the way that they made their wealth in the first place. So that always remains an important focus for this group.
And I've also learned a new acronym, the rise of EMEA, known as the everyday millionaire. How important is this?
So I think it's important because it creates something of a perception versus reality gap. So what has happened is that basically being a millionaire is not what it used to be. And the number of people in the $1 to $5 million category of assets has been growing. Now that is a function really of two related things. The first is property prices have been going up, and for most people in this group, the family home is the most important thing that they own. You have a two-bedroomed townhouse in Clapham. you're a dollar millionaire, almost guaranteed. So that sort of thing has pushed people into this category. And the second thing is with an aging society, and of course many parts of the world now have aging societies, people tend to have more assets and less debt, and that again pushes them up into this category. The thing is that most people who are in the sort of $1 to $5 million category don't think of themselves as wealthy. So they're saying, yes, no, we should tax millionaires, but not me. I don't count. And so you get politically this sort of friction that people say, yes, we should tax the rich. I'm not rich, but actually they're millionaires.
But they are.
Yeah. And so the perception versus reality gap is something which is relevant and could be quite politically significant, again, as governments look to mobilize this wealth.
And again, Paul, I think you make an excellent point about the affordability of housing and how difficult it is to get on the ladder in the first place. Thank you so much for that. Always a pleasure speaking with you.
Thank you.
Paul Donovan, Chief Economist at UBS Global Wealth Management.